I believe the 4-year cycle still exists. I believe 2025, most of the year will be pretty positive, and then we'll have another crypto winter. And people say, no, the 4-year cycle has been abolished. Fine, people are entitled to that opinion. I don't believe that. I think humans are going to human. I think we'll push prices too high, so I don't think we've topped. I think, my own personal opinion is 150 to 180K Bitcoin, and you can do the math or anything else, is the top of this cycle. And that would be about 1.5 times fair value. And you say, but Mark, normally we get 2 times fair value. Sure, but that's because
Mark Yusko explores the factors influencing the cryptocurrency market, focusing on the speculative dynamics that drive price swings. He acknowledges the explosive growth of assets like Dogecoin and XRP, but he is still adamant about the 4-year Bitcoin cycle. Even if some people are skeptical, Yusko thinks this cycle, which is based on supply-demand changes and market psychology, remains intact. Based on his analysis, Bitcoin may reach $150,000 to $180,000 at the peak of this cycle, which is about 1.5 times its fair value as determined by Metcalfe's law. Yusko, however, lowers expectations in comparison to previous cycles, pointing to the decreased leverage in the post-FTX environment. He contends that this change leads to a less parabolic but more sustainable price trajectory. Please take a moment to like this video, subscribe, and enable notifications for future cryptocurrency and macro trends insights. Thank you, and enjoy the video.
Yeah, look, I've talked a lot about this lately, and in that, none of us really know whether he has that power through executive order to establish any sort of strategic reserve of any asset. So it appears, and again, I'm not an expert on this, but it appears that it has to come through Congress. Okay. There are specific bills in front of different groups, one led by Senator Lummis and another led by, I can't remember the name of the senator, that are moving toward trying to create this strategic Bitcoin reserve. Yeah. Now, those are specific to Bitcoin. They have nothing to do with any other tokens. There's been talk about Trump making US-based crypto. Now we're talking cryptocurrencies, not Bitcoin. Bitcoin is a cryptocurrency, but let's differentiate. Cryptocurrencies that are US-based make gains on those tax-free. And of course, all the Hedera and the XRP and the Cardano people were, that's going to be great. And it could be great, but why would he do an executive order like that? Why would he, and again, I don't even know if that's in his purview, but why would he push for that regulation? Well, if he and his family have suddenly started to acquire crypto assets, it's logical, maybe not ethical or moral, but it's logical that then he would be in support of making those things more profitable. That's a big move since November. And and there are other, XRP is up 5 times that much. Dogecoin's up 3 times that much. So there have been massive moves in anticipation of all the good stuff. And Trump.
So you think the market's topped?
No. I think I'm persona non grata on this. I believe the 4-year cycle still exists. I believe 2025, most of the year will be pretty positive, and then we'll have another crypto winter. And people say, no, the 4-year cycle has been abolished. Fine, people are entitled to that opinion. I don't believe that. I think humans are going to human. I think we'll push prices too high, so I don't think we've topped. I think, my own personal opinion is 150 to 180K Bitcoin, and you can do the math or anything else, is the top of this cycle. And that would be about 1.5 times fair value. And you say, but Mark, normally we get 2 times fair value. Sure, but that's because in a pre-FTX world, we had lots and lots of leverage.
Right.
I think the leverage is lower this time. If you think about fair value follows that Metcalfe's law parabola. Right. But the price goes like this. It doesn't follow the curve. It goes above the curve. It goes below the curve.
Yep.
And right now, we're a little bit above. Fair value is right around 95, 98, and we're at 104, 105. So we're a little bit above. Do I think we're going to get, with fair value, getting into the low hundreds by mid-year? Do I think we'll get to 150, 170? yeah. And then we'll have another cycle. But I could be wrong, but that's just my view. Where I say every stock, every bond, every currency, every commodity, every piece of real estate, every piece of art, every collectible car, every case of fine wine, every private business, all 700 trillion with a T, 700 trillion, all of it will eventually someday be a token. And a token is not a little piece of gold, or, they always make it a gold coin. Like, there's no gold and there's no coins. A token is a line item on a ledger. And why does that matter? We have ledgers, we have databases. Well, no, we have centralized databases that are controlled by certain parties. In the decentralized world, that is blockchains, we have immutable, permanent truth instead of trust. The trust industry, banking industry, brokerage, insurance, et cetera, 848 years. It's had a good run, but now it's on its way.
Time to move, yeah.
And that's a good thing for the long term. As he said, 7 trillion with a T, 7 trillion every year is extracted from you and me and everybody else in fees to the current banking system and brokerage system to ensure trust, right? I have stock at UBS, right? I have a family harmony account with my brother-in-law.
Yusko compares the cryptocurrency market to gambling and sports betting, pointing out that a lot of young investors view these assets as a unique chance to create wealth for future generations, particularly when more conventional avenues like homeownership become less accessible. He emphasizes the significance of comprehending the fundamentals and market conditions of these investments, even if he acknowledges their speculative nature. He also describes how supply and demand mismatches caused by token launches can produce fictitious price spikes that provide the appearance of wealth. Yusko cautions, however, that tokens under the hands of centralized organizations frequently lack justice and transparency, making them riskier than decentralized alternatives. Also, a quick reminder, only a small percentage of viewers are subscribed. If you enjoy deep dives into crypto and finance, hit that like button and subscribe. It's free and helps the channel grow. Now let's get back and hear what he has to say.
Today, there are paper stock certificates in a file cabinet in Dallas, Texas at DTCC, and they're in the name of UBS. They're not in the name of Mark Yusko. And I have to ask permission to UBS to sell those stock certificates to you, and they take them out of the file drawer and move them to your file drawer at Merrill Lynch, not in your name, but in Merrill Lynch's name. That
For
is
a fee.
400-year-old technology. There are 4 different fees. Instead, with a tokenized security, I can send it to you with a couple clicks on my phone, and it's done. So Larry's 100% right, and I'm in violent agreement because I've said it before, that this is coming, and the banks, the brokers are gonna fight it. Why? Because that 7 trillion I want us to reclaim happens to be their revenue. TradFi, CeFi, centralized, DeFi. Ultimately, everything's DeFi. The whole world is decentralized and tokenized, but it's not going to happen overnight. But at the end of the day, there's only so much money.
Liquidity-wise,
That amount of money is controlled by central banks. We have liquidity rising or falling, and there's only so much. And so we saw that with the Trump token, right? When the Trump token was out, it went up, and then when the Melania token came out, some people sold some Trump and bought some Melania, and
swapped.
And there's only so much money. So is the meme coin phenomenon a little bit of sports betting and Las Vegas? Absolutely. Is a little bit of it that, the American dream of buying a house and having your real estate appreciate kind of gone for a lot of young people because housing prices are so expensive? Yeah. So they're like, hey, I can make generational wealth by speculating. Now, Donald Trump is right in the sense that he ducked the question, are you going to do more of these? In theory, according to I think it's called the emollients clause, he shouldn't be able to do it now that he's been inaugurated. Before inauguration, he was free. Now, are there limitations on his direct family? I don't know the answer. How about people hired by his family? I don't know the answer. So did he make a lot of money, like personally, when all the security details stayed at his resorts when he would go golfing? Yes.
Of course.
Should that have been right? I don't know. But Portnoy says something else different, which is, I could do this. I'm popular. Sure. People know who Dave is. But just because I know who Dave is, I'm not buying Dave coin. I'm just not. I have no interest in it. And some people would.
Yusko not buying Dave coin.
And the people who, if he did it, and I loved the dilemma he was having, which is the reason you can create this illusion, and I call it an illusion of wealth, is if you do what's called a free and fair launch, which means you distribute all the tokens equally to members of some community, then it really is only going to increase in value on normal supply and demand.
Yeah, that's the market conditions for sure.
If one party owns the majority of the coins,
right,
and a limited amount of float exists, that supply demand gets thrown out of whack. And then what happens is the big institution occasionally feeds the ducks. But just holding an asset that you own the majority of, that's not illegal. Is it true that the Cardano crowd, the XRP crowd, leadership, meaning the people who own most of those tokens, have been lobbying really hard on Washington, not just Trump, but the previous administration, to get favorable positions? You know, the XRP people want the banking system to use it as a base layer, like to replace SWIFT. And is there a world where you could see enough, lobbying being done that gets proposed by? I could see that. I don't like it personally, because I don't think it's decentralized. I don't think it's the right answer. To me, Bitcoin is the base layer, and then we build everything on top of that is a better solution. But again, long-winded way of saying, I think there's a lot of things happening. I think very little will be done by executive order. It has to go through the proper channels, but that doesn't stop the speculation.
Mark Yusko emphasizes how the meme coin phenomena is similar to sports betting and gambling, in that it is viewed as a means of achieving financial success by many young investors in a time when homeownership and other traditional wealth-building avenues are becoming more and more unattainable, despite their potential for sharp price spikes. He clarifies that these tokens are ultimately limited by the overall liquidity of the market. Liquidity in the system dictates the amount of capital that may flow into these speculative assets, since central banks regulate the money supply. Yusko notes, using the Trump and Melania tokens as an example, that investors frequently shift funds instead of adding additional liquidity when new tokens are introduced. Although this dynamic produces brief price increases, it does not always result in the establishment of long-term wealth. He cautions that when token releases are not carried out appropriately, meme currencies frequently function on the guise of wealth. Traditional supply and demand theories fail when a small number of people control the majority of the supply, while just a small portion is available for public trading, which results in controlled price changes. Yusko also discusses the impact of lobbying in the cryptocurrency industry, specifically in regard to initiatives like Cardano and XRP. While certain supporters of cryptocurrency strive for regulatory favorability, he contends that the objective should be true decentralization. According to him, Bitcoin is still the ideal platform on which to build additional layers and innovations for a decentralized financial system.